Hello everyone, welcome to PhillipCapital Weekly Market Watch. My name is Alice, Global Market Specialist from Phillip Securities. Today our topic is MSCI finally adds Chinese A-shares to key emerging markets index. What does this mean for A-share market and investors? On June 21st, MSCI announced it plans to add mainland Chinese shares to its benchmark emerging markets index. After the announcement, offshore RMB soared. The blue chips with large market value led the stocks rise in A-share market. In fact, MSCI has rejected A-shares to be added in its emerging markets index for 3 years running. In 2014, MSCI decided not to include China A-shares in the MSCI Emerging Markets Index, but would remain on the review list for the next year. In 2015, MSCI remained A-shares on the review list again and formed a working group with CSRC to address remaining issues. Last year, MSCI refused A-shares once again for 3 reasons. Firstly, the limit for QFII monthly capital redemption. Secondly, the risk for widespread voluntary suspension of trading in A-share market. And lastly, the pre-approval requirements imposed by the local Chinese stocks exchange. But international investors have embraced the positive changes in the accessibility of China A-shares market over the last few years, and now all conditions are set for MSCI to proceed with the first step of the inclusion. The expansion of the Stock Connect has been a game changer for the market opening of China A-shares. Consequently, MSCI plans to add 222 China A large cap stocks. A 2-step inclusion process will use to account for the existing daily trading limits on Stock Connect. The first inclusion step would coincide with the May 2018 semi-annual index review, followed by the second step, which would take place as a part of the August next year quarterly index review. Actually, MSCI relaxed its criteria for inclusion by cutting the number of processed stocks to 169 from 448 in March. The 169 stocks are easily accessible by foreigners through the Stock Connect link, and they are mainly from the industries from non-banking finance, real estate, pharmaceutical biology, public utilities, and media. Public information shows that MSCI is an American provider of equity, fixed income, hedge fund stocks market indexes, and equity portfolio analysis tools. The MSCI index is a benchmark index used by the most of global portfolio managers. According to MSCI's annual report last year, 97 of the top 100 largest assets managers in the world are their customers. More than $10 trillion in assets worldwide are based on the MSCI index, with more than 900 ETF funds trailing the MSCI index. And the current asset size linked to the MSCI Emerging Markets Index is nearly $2 trillion. At present, many international funds are tracking the MSCI index. Once a market is included in the MSCI index, it will attract a large amount of international funds into the market according to the composition and the proportion of the index. And in short term, the potential incremental capital is nearly 80 billion yuan after A-shares join MSCI. However, relative to the current A-shares single-day turnover, which is 400 billion to 600 billion RMB, 80 billion yuan incremental is a drop in the bucket. Short-term influence on the direction of the market is limited, but more on the risk appetite and market confidence. In the long term, A-shares will be brought into a large-scale overseas capital inflow, which has a positive effect on the global assets allocation and the stability of the RMB exchange rate. With this, we have to come to the end of this week's Market Watch. For more information on global equities, you may approach any representatives from Phillip Global Markets. And please subscribe to us on PhillipCapital YouTube channel and Facebook for more Market Watch videos. Thank you.